Hey everyone, in this current bull rally where majority of stocks have become expensive, there is one specific sector that I still find reasonable at current levels and has immense growth potential for long-term wealth creation. It's auto ancillary space. Now this auto ancillary sector I have been bullish for a long time and discussed it multiple times. The simple reason is auto industry in India is still highly underpenetrated. For instance, data suggests that there are just 20-25 cars per 1,000 Indians. For comparison, US has 900 cars per 1,000 people. And car is an aspiration for every person. With growing income and spending level, every person wants to own a car in India. And there's a huge trend of premiumization where people are upgrading their cars. Especially there is a high demand for SUV cars in India. On top of this, one of the biggest trend in the auto industry is electrification. So eventually the petrol diesel vehicle would get phased out and 21st century will be all about electric vehicle. Even the Indian government is highly focused on EV adoption. In short, auto industry in India has a long way to go. That's why today I want to discuss 5 auto ancillary companies that can be added in SIP mode. Although there is a good up move in these stocks, but I still find them reasonable and see more scope for upside. The best part is they are all fundamentally super strong companies. So any correction in these companies will only create buying opportunities. In short, the idea is if you are someone who has a fixed income and looking for quality stocks in auto sector for SIP purpose, you can consider these 5 companies. But remember, this is not a stock tip. I am just sharing my ideas and expect you to do your research before investing your hard-earned money. And needless to say, this is only for long-term investors. Alright, let's get started. So first stock in my list is Samvardhana Motherson. I covered this company first time in December 20 when it was at demerger and bonus adjusted levels of around 80. But during that time, company was struggling and share price fell down to lows of 60 rupee. I again discussed my conviction on this company last year in February 23 at similar levels of around 80 when it started recovering. So nearly 2 years there were no return and fast forward today this stock is trading at levels of around 200. In last 1 year itself, stock has more than doubled. That's what conviction is all about. A fundamentally strong company might not generate any return for 1 or 2 years, but it just takes a few months to recover all the lost ground. Even at current levels, I think there's still more scope for upside. Samvardhana Motherson is one of the world's leading player in wiring harness business, modules and polymers, vision system that include exterior rear view mirrors, integrated assemblies, and emerging business that also include aerospace segment. Now this slide gives a good picture of Samvardhana Motherson business. In terms of business breakup, wiring harness has the highest contribution with 28% revenue followed with vision system. Then its top customer include Mercedes, Audi, Volkswagen and top countries include India, US, Germany. Currently Samvardhana Motherson is trading at a market cap of around 1.34 lakh crore with a PE ratio of 47 and EV to EBITDA of 15. If you look at the shareholding pattern, promoter hold around 60% stake in the company. Although in March quarter, shareholding has reduced, but it is purchased by both FIs and DIs that have increased allocation in the company and hold a significant stake. Public holding is below 10%. By the way, Motherson Group also has another listed company, Motherson Sumi Wiring India Limited, which is focused on wiring harness segment for the Indian division. It is also a promising player in Indian auto ancillary space where it is currently trading at a market cap of around 33,000 crore and has got a PE ratio of 51. Second stock in the list is Sona BLW. Again, one of my top picks from auto ancillary space and a leading player in Indian EV auto ancillary segment. I remember covering this company for the first time in November 22 when its share price tanked more than 40% to levels of 460. Fast forward today, Sona BLW is trading at levels of around 650. Now this slide gives a good picture of Sona BLW's strength. It has 10 manufacturing plants, out of which 6 are in India, 1 in China, 1 in US and 2 in Mexico. That has 4 R&D centers. It is ranked 7th in world top 10 passenger vehicle OEM, 3rd in world's top 10 commercial vehicle OEM, 4th in world's top 10 electric vehicle OEM. And this is the journey of Sona BLW in last 25 years. Its revenues have grown from 16 million rupee to now at 31,866 million. Revenue CAGR growth is 35% versus industry growth of 9.5%. Simply exceptional. This is the financial metric of the company in last 3 years. Revenues have doubled, EBITDA has doubled, PAT has grown 2.4 times, EV segment business has grown 4.3 times. Number of EV customers have grown 3 times. Its Tata Motors global market share has jumped from 3% to 4.2% and differential gear market share has jumped from 5% to 8.6%. Number of products increased from 10 to 18 and net order book has jumped from 14,000 crore to 22,600 crore. This is the order book detail that stands at 226 billion rupee, that is 22,600 crore. Please note that this order book is 7.1 times of FY24 revenue. So there is excellent revenue visibility. Out of this, 79% of orders are from EV segment. This slide also shows a clear trend of reducing ICE contribution from 25% in FY21 to now at 10% and EV segment contribution growing from 14% to 29%. As of today, Sona BLW is trading at levels of around 650 with market cap of 38,000 crore and commands a P ratio of 78. Although valuations are a bit stretched, but considering the high earning growth of 30-35% in last 3 to 5 years and high order book, company would command a premium. So worth adding it in SIP mode. If you look at the shareholding pattern, promoter hold around 29% stake in the company. Although promoter stakes are reducing, but we have discussed it before also that as long as promoter stakes are purchased by strong hands of FIs and DIs, there is no need to worry. And that's what has happened with Sona BLW. Look at the increase in stake by FIs and DIs. FI stake is up from 8% to current levels of 32.9% and DI stake is up from 15% to 28%. Public holding is below 10%, that has consistently reduced in last few quarters. In fact, Sona BLW is also a part of my own portfolio along with a few other auto ancillary stocks that I share with my close community of long-term investors in my weekly video series that include one exclusive video every week. The reason for this exclusive series is to discuss my own conviction with long-term investors along with keeping a close eye on market and a list of more than 200 stocks that I track closely. You can get the details on my website or via the join button. Then third stock is Precall. I covered Precall fundamentals last year when it was trading at levels of around 340 and currently it is trading at levels of around 500. That's around 45% return. It is also part of my Diwali 2023 picks. Precall has an expertise in driver information system for both two-wheeler and four-wheeler that has evolved from mechanical system to a complete infotainment system. Company has been growing at a high rate with 3 years earning growth of 44% CAGR and 5-year earning growth of 23%. Company's management has given a target of 4,000 crore by FY26 against its FY23 sales of around 2,000 crore. So that's 2 times growth expected in sales. And margins are expected to improve from current levels of 12% to 13-14%. This slide shows the product portfolio of Precall that include driver information and connected vehicle solution, and within that, it includes these ADAS for two-wheeler and four-wheeler. Then they have telematics product, sensors and battery management system. Its product portfolio also include actuation, control and fluid management system that include various pumps and valves. Now currently Precall is trading at levels around 500 with a market cap of 6,000 crore and commands a P ratio of 43. Considering the growth opportunity in the medium to long term, Precall should continue to create wealth for the investors. Now if you look at the shareholding pattern, its promoters are holding around 38% stake that they increased last year, and there's a significant increase in both FIs and DI holding. It's because Minda Corporation, one of its competitor, purchased stake in the company but later sold it, and it was absorbed by top FIs and DIs that now collectively hold nearly 31% stake in the company. That clearly shows their confidence in Precall. Now fourth stock is Sansera Engineering. Again part of my Diwali 2023 pick and already discussed it in detail last year in August month when it was trading at levels of around 950. Since then it has generated around 35% return so far. This slide gives a good idea of Sansera business. Sansera is an engineering-led integrated manufacturer of complex and critical precision forged and machine component catering to OEMs globally. In FY24, 76% revenue is from auto ICE, 12% from tech agnostic and EV, and 12% from non-auto segment that mainly include aerospace and defense segment. Within ICE, 36% is from two-wheeler, 23% from passenger, 10% from commercial vehicle. In terms of geography, 69% business is from India and 31% from international market. Company has 17 integrated manufacturing facility with more than 500 engineers. In FY24, its revenues from operations have grown at a 20% rate and EBITDA growth is also very impressive at 25%. This slide gives a good idea of company's product portfolio transformation. In recent past, company is expanding its product range into fast-growing EV, tech agnostic segment and defense and aerospace segment. Currently, Sansera Engineering is trading at levels of around 1300 with a market cap of around 7,000 crore and command a P ratio of 37. If you look at the shareholding pattern, its promoters are holding around 35% stake, FIs hold 22% stake, and DIs hold 28% stake. So together, FIs and DIs hold nearly 50% stake in the company. Although FI stake has reduced in the company, DIs have increased the stake big time. Public holding is at 14%, that has slightly increased in last few quarters. Now, fifth stock in the list is Endurance Technology. I remember covering this company 3 years ago where I did 2 videos explaining the fundamentals and future growth potential of the company. At that time, it was trading at levels around 1400. From there, the share price touched peak of 1900 but then corrected around 40% over the next 1 year. So one of the reasons for underperformance is due to higher exposure in European market. Endurance generates nearly 1/4 of its business from European market that struggled badly. On top of that, around 75% of Endurance business is into two-wheeler auto component, and two-wheeler market in India underperformed during 22 to 23 period. As a result, company's earning fell down from peak of 566 crore to 460 crore, but in FY24, company has witnessed excellent growth with earning growing at 680 crore. And the stock is again back in action and now trading at levels of around 2650. Endurance Tech is engaged in the business of manufacturing and selling of aluminum die casting, including alloy wheel, suspension, transmission, and braking product. This slide gives an idea of its product contribution. Suspension contribution is 33%, die casting is 30%, disc brake 14.7%, and 70% of business is from motorcycle. Currently, Endurance is trading at levels of around 2,650, market cap 37,000 crore, and P ratio of 55. If you look at the shareholding pattern, its promoter hold around 75% stake, FIs hold 7.8% stake, DIs have 15.4% stake, and public holding is just 1.7%. So in this video, we discussed 5 SIP Grade Auto Ancillary stocks. As discussed, auto industry in India has a huge scope of growth due to rising aspiration of Indians, and auto sector is still underpenetrated in India, especially the four-wheeler passenger market. On top of this, EV is a huge growth driver in 21st century. All these factors would result in multi-decade growth opportunity in Indian auto ancillary space. And we covered 5 names: Samvardhana Motherson, Sona BLW, Precall, Sansera Engineering, and Endurance Technology. I've already discussed all these 5 companies in detail in the past. So in case you want to deep dive into each business, you can watch my previous videos. Apart from these 5 companies, there are a few more promising players like Unominda, Craftsman Automation, Varroc Engineering, Gabriel India, Suprajit Engineering, and Jamna Auto. And if you had battery companies, you've got Excite and Amara Raja in the list. So this is it for this video. If you find this video useful, do share it within your circle. I will see you in the next video. Till then, take care.